The U.S. Federal Reserve, the Bank of Canada, as you know, both cut rates midweek, while the Fed signaled the possibility of more to come. Market reaction has been positive, as you've seen. Some interesting moves are also happening in small caps. Let's get into that with Sam Stovall. He's Chief Investment Strategist at CFRA. Sam, what do you think had been a drag on small caps so far this year?
Hello, Marella. Well, I think it was the worry that we would actually be slipping into recession or already possibly in recession because the Fed was not acting, not cutting interest rates and helping to support the overall market. But I think because economic indicators are still pointing to a bit resilient GDP outlook and that the unemployment rate by historical standards still remains fairly low, that with the prospect now of two more rate cuts this year, as well as at least one, we think it'll be two in 2026, that would go a long way to supporting equity prices and help to delay an onset of recession.
Yeah, can you expand a little bit on the significance of the shift you're seeing in the markets and overall in the economy?
Yes, well, the shifts we're seeing is a gravitation more toward the mid and the small cap arenas. Certainly from a sector perspective, it's still a lot of your usual suspects in terms of technology leading the pack. But in the small cap area, we recently saw some improvements in the materials, in the industrial category. And so here we're seeing a little bit of a dive into some of the other cyclical areas. So I would tend to say that because small cap stocks now represent or have a 34% discount PE on forward 12-month estimates as compared with the S&P 500, so at a very attractive discount to its historical relative PE, that possibly because of more rate cuts, that small caps will continue to outperform.
So how much were these stocks pushed down so far this year? If you can give me sort of more of a range.
Well, the small cap stocks had fallen in concert with the S&P 500. From February 19th through April 8th, the S&P was off almost 19%, but small cap stocks were down about 25%. So they were in a definite bear market environment. Now what we're seeing is that the small caps have started to pick up and are still underperforming the S&P 500, but certainly not by the margin they had. And yesterday they had scored their first all-time high since November 8th of 2021. So a very long time in coming.
Okay, so historically then, what happens to the small cap market after that big run up in the big cap?
Well, we've had 89 new highs for the S&P 500 going back to November 8th of 2021 versus yesterday's number one for the small cap stocks. And historically, whenever you have seen an extended period in which the S&P has posted 25 or more new all-time highs versus zero for the small cap index, what we find is that the small cap group has risen by a little more than 8% over the next 3 months and did so about 80% of the time. So a fairly positive historical precedent, but certainly not a guarantee.
So looking ahead to the rest of this year, what are either the catalysts or the risks that you see could either drive or derail what's going on with small caps?
Well, the catalyst would be that we do indeed get another rate cut at the October FOMC meeting, and we get further hints that there will be another third cut in December, and then maybe even two more in 2026. What could derail that is if we have much stronger than expected retail sales, GDP data, and inflationary indicators. That could end up causing the Fed to say, gee, maybe we'll wait until December to cut for a second time. Or if we end up seeing the job market really start to cool off quite swiftly and thereby resurrect the worry of recession, because bull markets don't die of old age, they die of fright. And what they're most afraid of is recession.
That being said, it does feel like investors are looking at a lot of the data and still have sort of tossed it aside and piled in optimism and enthusiasm into the markets?
Well, interesting you asked that, because the last interview I did, the person asked me, well, why is it that people are still so concerned about the market and reticent about adding to their holdings? So if the thought is that there still are a lot of people who are worried about a near-term correction, then we're really just seeing people little by little throwing in the towel and adding to their portfolios, which would imply that we probably are going to see higher prices through the end of the year. And historically, that has been the case whenever we have had new all-time highs recorded in large cap U.S., large cap international, and now with small caps, the momentum tends to be on our side.
Sam Stovall, I will leave it there. I'm out of time. Sam's the Chief Investment Strategist at CFRA. Thanks for your time.